if you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes.
Yeah, fair enough. It's a great point. Now, the whole process of finding, identifying, and working out what a great business is, it is a bit of a long process.
Yeah.
It does take time. You need to build familiarity with the business, understand exactly what it does. Now, after doing all that work, why would you just want to be in the stock for 10 minutes?
Absolutely. Yeah.
So in the market, people trade because they feel like they can pick a high and a low.
Okay.
They feel like they have the ability to try and say, if I buy it here, 10 minutes later, I can sell it there. And some people can do that. Some people have indicators, they try, they work it out, but it's very, very rare. Probably 1 or 2% of the traders that I've seen. I've seen this in my career so many times that traders and day traders, they can make some money, they will make some money here and there, not enough, as only very, very few people that have been able to do it successfully. But in saying that, leaving day trading aside, because that is also a lot of hard work and it's full time, you're in the market, you're constantly watching it, you can actually sit back, relax, and invest into a company without having to do so much work and take up, between 10 to 4 of your day, 5 days a week, watching the market. You can find the best companies to invest in them, and let them do the work for you.
Welcome to the Teaminvest Wealth Builder podcast, where we help you build smarter wealth and make more confident investment decisions. Welcome to this week's episode of Teaminvest Wealth Builders podcast. With me today, I have Sanjay Narendran, our head of funds management and education here at TIP. Teaminvest incorporates a lot of the value investing principles discussed by Warren Buffett. So what we're going to do today is we're going to have a look at those principles, and then we're going to discuss how we've incorporated those principles into the Teaminvest philosophy. So Sanjay, thank you for being here today.
Thanks, Gary.
So what I thought we'd do is just get started. So I'm going to read out the quote and then we'll just discuss it. Does that sound all right?
Sounds good.
Awesome. Okay, so our first cab off the rank. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price.
Absolutely. Now, if you think about, there's a lot of companies out there that do okay. They don't shoot the lights out. They do okay. So you'd consider them a fair company. They don't make much money. They don't go broke. And what comes to mind are the banks. A lot of the banks, they don't really grow much nowadays. They have a growth rate of about 1 or 2% over the last 10 years. And if you're able to get them at a great price, you could own a fair company at a wonderful price.
Yep.
However, at Teaminvest, we would much rather own a wonderful company and get that at a fair price. So it doesn't necessarily mean that we have to buy them at bargain prices, although we would look to. And
It's always a benefit, right?
Absolutely. And if you had the opportunity, you would try and pick up as much as practical for yourself in those bargain prices. But if you've already identified that it needs to be a wonderful company.
Yeah.
So a wonderful company is something that can keep growing, has a track record of being able to grow. It's giving you a 10% return on equity at least. It's growing by at least 10% a year. And you could see that business continue to grow over time. And in doing that, it'll grow your wealth. Now, it doesn't mean you want to overpay for the business.
Of course.
But it's okay to get in at a fair price of what the market thinks that it should be worth. And, well, when I say the market, it's what you think, how you value it and how you think it should be worth, because the market will often misprice it.
Yep.
So have an idea of what type of return you're going to expect from that business now that you know it's a great business, and then price that in and factor in the amount of risk you're taking on that business as well. So the more risk you take, obviously the higher return you'd like to see, and the less risk you take, you'd be happy with a stable enough returns, but it should still factor in growth over a period of time.
Yeah. And it comes back to really understanding the company, right? Really understanding, why am I purchasing this company? Is it going to be a good long-term investment?
Absolutely. And you want to understand it. You want to know what the strategies are, the moats, the risks, the trustworthiness of the management. These are stuff that we at Teaminvest cover in what we call our SMART process, which is essentially our due diligence process when we are looking at a business to invest in. So now that we've run that process, we know it's a great company, then factor in how much do I want as a return?
Yeah.
You do the same thing if you're buying a property.
Yeah.
If it was an investment property and you'd want to buy a property, you want to know, okay, this is how much I'm paying. This is my interest rate on my mortgage. This is the rental yield. And this is my chances of growth. You factor all of that in. So do the same thing with your investments in the equity investments as well.
So it almost hits back on, we talk about factfulness, and really understanding the facts of the company and really understanding it and making our decisions based on fact rather than the emotion that drives the share market.
Yes, absolutely. And I think this is one of those things that Warren Buffett learned a little while into his relationship with Charlie Munger. Initially, if I'm not mistaken, Warren used to try and buy companies that were undervalued, whether they were great companies or not. He would be able to find a company that was significantly undervalued and buy in. And he did pretty well doing that. It was more shorter term trades.
Yeah.
And that saying really comes from Munger's influence of saying, you know what, rather than these short-term little gains, trying to identify fair companies and you're going to have some hits and misses, why don't we just focus our time and attention, which is really more valuable, onto the best companies and get the best returns we can on those best companies. And it's okay if we pay a fair price for them. We just want to make sure that the companies we're buying are more solid and secure. And that, I think, really changed the game for Warren and Munger as a partnership, and see where Berkshire is now.
Yeah. And that's what we do here at Teaminvest. Like I said, we invest for the long term. We're not trading.
Yes.
And when I say trading, it's that buy, sell all the time.
Yeah, that's right.
And you did mention Charlie. So his name actually comes up in this next quote. So it says here, Buffett says, Charlie and I have learned how to solve difficult business problems.
Well, there's actually a second part to that quote.
Right.
He also goes on to say is, what we've learned to do is avoid them. So these difficult business problems, they do come up, and you have to be good at being able to solve these difficult business problems. But in most cases, a difficult problem can be avoided if you have some pre-plan and some steps involved early enough that you can avoid the problem altogether. And again, we put that into practice at Teaminvest through that SMART process I was talking about earlier.
Yeah.
We identify what that company's strategy is. We identify what are the moats, what protects this business and its revenues from competitors coming to eat their lunch.
Yeah.
We look at what are the risks, what are the other risks that this business faces. Could it be political risk? Could it be economic risk? Could it be cybersecurity or anything? Whatever it is, what are the different risks that will impact this company's ability to make profit? And we look at the management, the trustworthiness of management. So when we've done that process, we're sitting there with the knowledge to see what it is that protects this company and allows it to keep growing into the future. So if a risk triggers, if a change in the strategy occurs, if there's something that devalues that moat, then we're well aware of it.
Yeah.
And we know that we can pull the trigger way before the rest of the market can.
Yeah. And even before that, like we talk about wealth winners and capital killers. And the way that we work is we actually avoid the capital killers.
Absolutely. Absolutely. So the whole process of Teaminvest is about avoiding stocks, finding reasons not to invest in them. So a lot of that is already done. And maybe I should have expanded on that first before I got into the ones where we actually invested into. But it is important still that once we've made a decision, we've invested into the business, and unlike management, as shareholders on a listed equity, we have that right and that freedom to be able to buy in and sell out if we have to. Not that we want to, but if something changes because the business, the landscape, the environment, the management, things all change, we can still respond to those changes in real time.
Absolutely. Absolutely. And that's probably a good segue into the next quote, which is if you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes.
Yeah, fair enough. It's a great point. Now, the whole process of finding, identifying, and working out what a great business is, it is a bit of a long process.
Yeah.
It does take time. You need to build familiarity with the business, understand exactly what it does. Now, after doing all that work, why would you just want to be in the stock for 10 minutes?
Absolutely. Yeah.
So in the markets, and I'm talking about having a career watching the market daily for the last 20 years.
Yeah.
So I know the markets, the way it fluctuates. People trade because they feel like they can pick a high and a low.
Okay.
They feel like they have the ability to try and say, if I buy it here, 10 minutes later, I can sell it there. And some people can do that. Some people have indicators, they try, they work it out, but it's very, very rare. Probably 1 or 2% of the traders that I've seen. And I've employed many, many day traders. I've looked after clients who have been day trading. So I've seen this in my career so many times that traders and day traders, they can make some money. They will make some money here and there. Not enough, as only very, very few people that have been able to do it successfully. But in saying that, leaving day trading aside, because that is also a lot of hard work and it's full time, you're in the market, you're constantly watching it, you can actually sit back, relax, and invest into a company without having to do so much work and take up, between 10 to 4 of your day, 5 days a week, watching the market. You can find the best companies to invest in them, and let them do the work for you.
Yeah. Yeah. And I mean, Warren backs up this quote with another quote here that says, only buy something that you'd be perfectly happy to hold if the market shut down for 10 years.
Yeah, that's right. And I think 10 years is maybe an exaggeration in terms of the quote, but the reference is correct, because there could be a company and all of a sudden it becomes unlisted. It comes off the market or whatever the reason is. But I think his point goes more to the mindset of making that investment decision.
Yeah.
So if you're taking an investment decision, make the decision as to, let me invest in this company and hold it for 10 years. Now, you're not committed to a 10-year time frame. It's all arbitrary. You just want to be able to hold it for the long run because you know that this is a great company.
Yeah. Yeah.
You don't want to be just up and down, changing your mind, switching around, but hold it as it's a great company. If the facts change, if the world changes, you can adjust your opinion
Move.
and
Yeah.
you can move with the times. But go in with the intention that I'm going to buy this business. So I want to do a full and thorough due diligence on that business. I want to know what it does and be aware of the circumstances that might affect it over that 10-year period. And then I'd be happy to go in and own it.
Yeah. And we do that due diligence by that 2-step process that we have.
That's right.
We have a look at the filters that we have in place. And as you've already alluded to, we've got 600 plus members that are experts in each of their individual fields. And that's how we really get to know these companies.
Absolutely. And that's the value that Teaminvest provides. But these are things that individuals can do for themselves.
Absolutely.
It's just that when we do it at Teaminvest, we have the software that makes sure we don't waste our time on potential dogs. We then look at that smaller pool, and we have those 600 members, as you mentioned. They all come from expertise in different backgrounds, and we're not talking about just having a career here. We're talking about senior expertise.
Yeah.
People that have had deep knowledge of the industries that they've been in. They've been at senior levels, so they understand the economics of those different industries really well, and then they come and share that feedback with the group.
Yeah.
So it allows everybody else who hasn't been in those industries to now get that picture of what makes that up, and is this really something that I should be worried about or not? And it's not just one person from each industry. We've got 600 people, multiple people from each industry, and everyone gets an opinion and has a say in all that process. So it allows us to become better investors in that process.
Absolutely.
Following the incredible success of our standout event in Sydney earlier this year, we would like to extend a warm invitation for you to attend the Emerging Wealth Winners Conference, Melbourne 2025. This event will be held in the iconic MCG Members Dining Room. We're bringing together a standout lineup of only 7 curated ASX-listed CEOs to present the insights, the knowledge, the shared wisdom, and the strategies that help inform investors making wiser decisions on when and where to invest into. This event is sure to be jam-packed, full of the knowledge and the wisdom that you're seeking, and we encourage you to register at tipgroup.com.au. Check out the events page, and we look forward to seeing you there.
Absolutely. And that's again a good lead into the next one, which is the most important quality for an investor is actually temperament, not intellect.
Yes. So I don't consider myself an intellectual, but there is a lot of intellectual people at Teaminvest. And I don't know that it is a good thing to be intellectual. It is a great thing for them. It's just a different personality trait.
Absolutely.
I don't think being intellectual is necessarily a positive nor a negative when it comes to investing.
It's a particular way of thinking, right?
Absolutely. But if you have the right temperament, that makes the bigger difference. If you've got the right temperament with the right mindset, that you're going to go in and you have a process and you have a strategy and you can follow that and stick to that, then you're going to be a much, much better investor. And the people with the right temperament that I've come across in investing and across my career prior to Teaminvest, it's the ones that have that process built into their temperament. They know they can follow it. They don't get emotionally dragged into the sentiment. They don't allow all the noise to filter through and start affecting their investment decisions. They can be clear. They have a process. It meets it. It doesn't meet it. They can make decisions accordingly.
Yeah.
And you mentioned one of our values earlier about factfulness, and this is one of those things. The process is built on fact. It's built on research.
Yeah.
And as I said, it doesn't have to be the Teaminvest way of doing things, but I've met traders that have process, and actually the successful traders that I have met in the past, the ones that have been able to do a lot out of trading,
Yeah.
is because they've had a process and they didn't become emotionally tied up to the individual companies or the stocks or whatever it was.
Yeah.
They just kept following a process. So I think to become a great investor, the most important thing is have a great process and have that temperament to go through with that process without the emotions coming and playing a part.
Do you think it's fair to say that you need to be a patient man or woman to be a good investor?
Yes, absolutely. Patience is key. And trying to expect all at once. And for me, I'd apply this to life as well. You expect everything and you want everything and you want everything now.
Want it yesterday.
Exactly. So it doesn't work like that. It's the ones that you've accumulated over time. You've grown it steadily, step by step, and it's watched it grow. It's not just a huge spike, because those big swings, they come and go.
Yep.
But if you're just slowly, steadily amassing a wealth and an investment in the portfolio, then that is going to be a much more sustainable portfolio. And recently we did talk about my experience and my father's experience, and we did go through some very, very large highs and having those good periods where we've been able to make money.
Yeah.
They also come with swings the other way. So there are bad periods, and they'll catch you unaware. No matter how confident you feel you are, they will end up catching you.
Yeah.
And it's great to have those kicks every once in a while. They give you a boost. They give you a bit of cream on the pie. But at the same time, if you can have a formula that keeps building steadily, you're going to be a much better investor that way.
Yeah. And it's having that process and the patience to go along with that process.
Yes.
That allows you to cut out the noise and not be driven by your emotions or even the emotion of the markets.
Absolutely. And those big swings, you can't do anything about them. There's no influence you can have or control you can put into place to take advantage of the big swings. Only the big swings. You would much better off having a process where you can implement that on a daily basis or on a regular basis, maybe not daily, but a regular basis, where you can focus on, this is how I'm going to accumulate my wealth, and let the swings just happen. But as long as that wealth accumulates over that period, then you're going to be much better off.
And talking about swings in the market, something that Buffett says is we simply attempt to be fearful when others are greedy and to be greedy only when others are fearful.
Yeah, that's exactly it. If we just take that back to what we were previously talking about, I mean, Buffett said this, and in a few ways at a few times, it's not just a rare quote from him. It's quite publicized on this quote. But yes, we do want to be fearful when others are greedy. I mean, the current market, if you look at it now, the prices are through the roof.
Yeah.
Everybody's buying in. And there's several explanations for it. Everyone can justify why things are the way it is. It could be superannuation funds. It could be inflows of money. It could be wealth growing across the economy. There's all sorts of reasons you can justify the way it is. But at the same time, when you see that happening in the market and things are starting to blow up, I think that's the point we've got to start being really fearful. And I know I am. I am really fearful of what's happening in the market, and not from my portfolio point of view, but I'm more fearful from a citizen, a taxpayer, and an investor as a worker point of view, because I can see things will get to a tipping point. And as we were just saying, those swings don't last forever. It's swinging up and it's really at a high range. I don't know, it might continue going higher before it comes down, but I do know that eventually something will change and it will swing back the other way. The markets do not just move in one direction.
Yeah. And we're talking about markets that we've done previous podcasts where we've spoken about volatility, and we've spoken that that's a swing from where we expect it to be, up or down. And we're talking about the market swinging high at the moment, and what's going to happen next. So risk is a word that's thrown around a lot, and I know that we've done a podcast earlier on risk as well.
Yes.
But one thing that Warren does say is risk comes from not knowing what you're doing.
Yes, that's right. So this goes back to some of the points we were talking about earlier. Be prepared. understand what you're doing and understand the risks that you're taking, price that in, put a valuation on the risk that you're taking and add that to the valuation of the business and say, okay, this is how much my money is worth. Everybody has a benchmark of how much their money is going to be worth.
Yeah.
And how are you going to improve that? If you take on some risks there by investing into a business, no matter how much of a wonderful company it is, every business will have risks. So depending on the level of risk that lets you sleep at night and makes you comfortable, take that on, price that into how much you're looking as a return. And if that business doesn't meet it, then don't worry about it. Put it in the too hard basket. Yeah. But just tying this back into the earlier quote that we were talking about, when we were talking about the swings and being fearful when others are greedy, which is currently where we are at, we also want to be greedy when others are fearful. Yeah. So when that swing does come around, if you've identified all your risks and you know what you're pricing at, and if you can't find anything, well, you can't find a lot of great businesses, they will come and fall in your lap when the market turns and everyone starts becoming fearful.
Yeah.
We've seen that a few times over the years. The GFC was one that I experienced firsthand. There was COVID. It was a huge swing down and then a very monumental swing right back up. That was probably a short-lived, well, what do you want to call it, a dip or a movement at the time. But even before that, take it further back in history. There's been so many. There was a tech bubble. There was all sorts of different things. These things, they do gradually go up. They go up steadily and then they correct.
Yeah.
And in those corrections, understand what your risks are. Understand what you're holding. Understand the businesses that you're invested in. And then be prepared to be greedy when everyone else is being fearful, because you're more aware and you've got a set process with the right temperament. Incorporate all of these things and put that into practice.
Yeah. And that's the way, isn't it? That's
right.
The way to be greedy when others are fearful.
Yeah, that's right.
Because you can take away your own kind of fear, because the risk comes from not knowing what you're doing, but you actually know what you're doing because you know your companies, you know your process, and you know the fair price that you're prepared to pay for those companies.
Yeah. And if the business is too hard to understand or you can't fully get your head around all the risks that it might be expected to impact that business, disregard it. Don't worry. You don't need to own it. Nobody's forcing you to own that business. Maybe even if it's at a wonderful price and others might think it's a great business, if you don't understand it or if it's too complicated or if it's too hard, don't waste your time on it. You'll find plenty of other businesses out there that you will understand from your own experience and your own comfort levels, that you can price in that risk. You can price in exactly what you're going to be investing in and be invested there and sleep at night.
Absolutely. High priority there.
That's right.
And that brings us to our last quote today. Pick out associates whose behavior is better than yours and you'll drift in that direction.
That's so true, Kerry. This is why I hang out with you.
Oh, of course.
That's exactly what we want to do, though. The old saying goes, you lie down with dogs, you get up with fleas. Yeah. It's true. There's always exceptions to the rules and so on. But at the end of the day, if you surround yourself with people that you want to be like, people that have maybe achieved success, if success is on your mind, whether it's in your career, whether it's in your investing, but surround yourself with people that you admire and that will rub off on you. You'll start to learn their behaviors, and it's just a natural adaptation. You don't have to sit there and take notes of everybody and what they're doing, but you start to build that culture around you, build those people around you where you see how they operate, see how they act. You will learn from them.
Yes.
And that was a huge driver for me to say, okay, I've been in this broking industry for so long. I met the people here and I really admire what they do. I admire the way that they look at a business, they make investments. I admire the way that they've been able to collect a group of people together to get such valuable insights and understand those businesses. And they don't go out to just extract money from them, but it's about making money off the market. So together we can all join forces and make it's us against the market.
Yeah.
So that was the point, right? So I'd rather be in that circle and the community of people where we can focus on making money out of the market and grow my wealth that way with experience, with knowledge, with the expertise that they bring into a room, and constantly learn and improve myself. Then I bring in people like yourself and like Pete that we have over there and the rest of the team who can help uplift each other and create that culture of that environment to keep moving ourselves forward.
Yeah.
People of the like mind, people of the right ambition, we can keep growing and stepping it up there.
Absolutely. And I think it's the culture and it's the values and it's the learning from each other. But I think it's also the mindset, because you start to see what's possible. Because seeing somebody else, the only thing that's better than your own experience is talking to somebody else who has had that experience. And you kind of start to hit that mindset of, well, if it's possible for them, then it's possible for me too.
Yes.
And you just start to, change, and your behavior changes, your mindset changes, and you just start to move in that direction.
Yeah.
As Warren Buffett says, you drift in that direction.
Yeah.
And I think that's something that we have the benefit of Teaminvest, where we already have a membership of all these people with all of this experience and all of this success. We're not talking about people that have just kind of, give it a go, mate.
Yeah.
These people have success and they've got a background of success, and we've seen the results over a 24-year period.
Yeah. And this is the thing. Some people are in positions where their situation, the people around them, they have a certain level and of influence around them, and they want to break out from that and move up.
Yeah.
It's not to say that you're leaving everybody else behind, or you can still be involved, you still be friendly, you still have all of those kind of things. But if you're looking to try and elevate yourself beyond that, it's worth exploring and becoming part of something a bit bigger.
Yeah.
Some people gravitate to religion on that basis. Some people gravitate to investing communities or different type of communities. This is one of those things where it's brought me involved, and it's brought a lot of us involved into looking at that and being part of that big mindset and drifting along in the right direction. Yeah. The other way to do it is this is Teaminvest is probably a bit more of a exclusive community for people that have achieved success. But for those that haven't, there's still ways that you can be part of Teaminvest. Start to include Teaminvest in your culture, in your presence in your life, just even by listening to our podcasts.
Yeah.
Some of the stuff that we talk about, start hearing it, start feeling it, see if you can employ it, start putting it in. We put out a lot of newsletters to our fund members and things like that, where we try and give them a lot more content or give them more information. We do that through the podcasts, newsletters. We go on Ozbiz and other TV shows to try and get that word out there. Because as Warren's been clearly doing, he's not shy to let people in and teach them how to make money. He hasn't held on to that secret. And there's no need for us to do that either.
It's not limited.
Exactly. Yeah. Everybody can do this. The fact is most people won't. We know most people will sit on the sidelines, leave it out, and then at some point they keep beating themselves up about it, saying, why didn't I do it? Why didn't I do it sooner? I should have taken the steps when I needed to take the steps. but eventually they can come around or they might not. But if you want to step out of that position and really do something for yourself, take some action, follow through, and even in any small way, start a connection with something a bit bigger than yourself in the direction you want to go.
Absolutely. And if that's something for our listeners, if you're really resonating with this and you want to know how you can get involved with Teaminvest or all of the other things that Sanjay has just mentioned, jump onto our Teaminvest website, teaminvest.com.au, where you can subscribe to our newsletter, you can ask us questions, subscribe to this podcast, and also don't keep this to yourself, as we just mentioned with Warren Buffett.
Sure.
If you know somebody who this would really resonate with, then we ask that you would just share this podcast with them. Well, thank you for being with us today, Sanjay. It's been really insightful and really fun just exploring these quotes.
Thanks.
Thanks so much, everyone. Have a great day. The information contained in this podcast is of a general nature and is not intended to address the objectives, financial situation, or needs of any particular individual or entity. It is provided for informational purposes only and does not constitute, nor should it be regarded in any manner whatsoever as advice. It is not intended to influence a person in making a decision. No one should act on such information without appropriate professional advice after a thorough examination of their particular situation and needs. Thank you for joining us on this episode of Teaminvest Wealth Builders. We hope you found today's discussion insightful and inspiring. If you know anyone else who could benefit from hearing this episode, please hit the share button and pass it on. If you'd like to learn more about Teaminvest or our unique investment approach, visit us at teaminvest.com.au. And please don't forget to subscribe to the podcast for more episodes. Until next time, stay informed, stay invested, and keep building wealth.